I'm always curious about what we're doing really well from a RegTech perspective. So what problems are we solving really well with technology today? And where do those challenges and opportunities still exist? So where do we still see gaps in tension? And I'll throw that one out generally for whoever wants to take first swing.
I'll go because I'm probably, old and still have fresh ideas. But I think that, as Pascal mentioned, a lot of innovation has already occurred in the identity space. And I think that we're doing a good job in RegTech on the transaction monitoring and identity verification sides, and that's been driven by the Know Your Customer and anti-money laundering frameworks globally. So that, we've innovated where the money has led us to innovate. I think that we're relatively weaker in areas of big opportunity, like the ability to audit, the applications of blockchain and AI to audit functionality, and the governance framework that's expected not just at financial institutions, but really across any regulated industry. So I think there's certainly more opportunity there on those sides that haven't been tackled yet.
At the risk of maybe stealing Stuart's thunder on that as well, I think some of what his shop does is in the space around, maybe I'm stating this wrong, but compliance as a service, getting firms, not just doing diagnostics, not just in compliance management or compliance monitoring, but actually helping to provide the tools that have been spoken about to get the job done, whether that's data control, mapping, figuring out where things are. Some of that stuff has been really impressive in the last few years.
At the risk of going down the panel, so we'll try and avoid, but I actually think we're at a really interesting time. So RegTech has become fundamentally sexy. And what I mean by that is, for better part of decades, compliance departments were the brakes at companies and the C-suite were the gas. And every time compliance showed up, there was some other reg, FATCA or otherwise, that literally you didn't want them in the office. And when they came in, and I've run regulated financial firms, the sooner they left, the sooner you could get back on trying to make money. And something has changed. And when I did my TED talk on this a couple of years ago, we talked about the customer data being like this new move and understanding the role of the customer and truly this kind of new world we're going into. And whether that's accelerated by Equifax breaches or Facebook and Cambridge Analytica, the market has fundamentally moved. And it's moved to understand that trust is the new black, that trust is imperative, and that the way to generate trust and to get ROI to your customers is to engage them openly and clearly in that data relationship. And so many of these new regs are built specifically with the customer in mind, not actually the market in mind. And this is really interesting. And what it means is RegTech is now welcomed. We are true partners with global corporates. And it actually therefore means that it's exciting, it's interesting, it's being heavily funded. I think as a result of that, panels like this and people participating in the market, it's become an incredibly interesting and exciting place to work, because now people aren't seeing you as kind of the bringing in, someone's going to bring a big stick. Rather, you can bring in carrots of NPS, ROI, great experience, customer centricity, cost savings. And that means a huge difference, I think, for the market. So I actually think it's the best time I've seen in the last 5 years for us to be doing exactly what we're doing right now.
Yeah, I think that's right. And I think that from the bank perspective, what we see is that a lot of them, and FinTechs alike actually, are looking to sort of future-proof the stuff that they're doing now. So they're tired of integrating new things, whether that's through their other cloud vendor or other vendors, period, through their cores, through kind of data providers they work with. They're sort of tired of having to constantly monitor with what's going on and understand the model governance. And there's a whole host of things. Once you've done integration, it's not sort of problem solved. It adds this huge long tail of work. And so I think what we see is people are banks are coming to us and saying, look, we don't want to do this again in 2 years. We know that something new is going to be out there. We want to come up with a solution now that's flexible, that we can sort of grow with over time. And so I think that's another sort of factor at play here, that we're finally able to do that with banks finally using cloud technologies.
So Canada has had a couple of proposed changes in the case of the Proceeds of Crime, Money Laundering and Terrorist Financing Act, and then some proclamations in terms of the application of securities legislation recently. How do you feel that we're doing in terms of Canada itself? Are we making the right moves, and how does that stack up against what the rest of the world is doing from your perspective?
You're starting with me on that one? From our perspective, I mean, I can put on two hats, thinking about AML and thinking about anti-terror financing from the regulatory perspective and then from the business or the FI perspective. From a regulatory perspective, that whole endeavor to put out a new set of draft rules that are going to be coming into effect next year is really framed around bringing Canada in line with the rest of the world. So we had been designated by the US and by other jurisdictions as really a problem region in terms of some antiquity, I guess, when it comes to those rules. So we've got something new in place or to come online next year. And I think by and large, it reflects a lot of the changes technologically that we see with the way money is being handled and the way it's being processed and the information that we have about those transactions. And the expectation, I think, in these new rules is really that FIs are going to be able to drill down a lot further than they ever previously had. And this is, again, consistent with a lot of the regulation happening in the EU. So, there's an expectation that FIs are going to dig in to figure out who the beneficial owners of companies are that they're dealing with, which is a key one when it comes to things like money laundering and anti-terror financing. And as well, the regulations reflect, the state of the nation or the state of the world in terms of the speed at which these things happen. So once upon a time, I think there was a 30-day reporting requirement for suspicious transactions. Under new regulations, that becomes 3 days. So again, this isn't rocket surgery. It's modernizing of processes to make things make more sense in the current landscape. So from a regulatory perspective, I think it does bring Canada in line with the rest of the world. From the FI business perspective, it's going to take work. It's going to take the folks on this stage and maybe sometimes people like me to help navigate and to help put systems in place to make sure you're keeping up, because there will be a lot of keeping up to do. So good from one perspective, challenging from another, probably good overall.
And I think this is always an interesting conundrum, because when someone asks what they need to do to be compliant, the question is, in which one of the 180 countries do you intend to be compliant? How do you look at that challenge when you're building out your solution? How do you build something that works across multiple jurisdictions?
Well, number one, you don't, but you prioritize. So we are very careful in which jurisdictions in which order, based on demand. We engage with regulators openly and freely all the time. We ask, and in some areas we actually enforce direction and policy change. We're doing that in 3 countries right now, where we're working with governments to enact the change necessary to launch an EID platform. It's a tricky answer. It really isn't. It isn't a fair question because there isn't a fair answer to it, to be honest.
I know.
What I would say is, you have some benchmark customers, and those customers are foundational for success. And we tend to invest deeply in those relationships. And so if they have a market that's important to them, then we will add that and prioritize accordingly. I think if you treat your customer as golden, then that's probably the path forward. So I tend to listen more than drive that answer.
Yeah, and Stuart's right. That is a very unfair question, but I think especially for all of the entrepreneurs in the audience that deal with the fact that technology is instant and global, and regulation is slow and it's local. Understanding the answer to that, understanding how to think about it, how to prioritize, is incredibly important to your business.
Well, and I'll share a tip that we learned, because what we decided is that, the business process, before you can automate it, it has to be standardized. And so in our solution, we built it so that it's content neutral, it's content agnostic. And you analyze the business process, and then you allow the experts in those jurisdictions to weigh in on the specifics of their regulatory requirement. So we can plug that agnostic platform into an EU framework, a US framework, a Canadian framework, and so on and so forth. We also have to work on influencing the regulators themselves. They are slow, they are methodical, and with good reason. But they need to also understand that they've got to give us some help, right? We should be able to just issue a regulation as code. It's 2018, right? But they're not with us yet. So we've got to keep working in that direction too.
Yeah. And we've had a few questions come in. So I want to ask, what advice would you have for startups and for founders? And there's 3 specific areas that people are interested in, so feel free to hit any and or all of them. In terms of better engaging in regulators, in terms of expanding into markets outside of Canada, and in terms of better engaging and partnering with banks.
So we work with banks as our clients, and FinTech companies, and often we sit actually between them, where there's a sponsor bank or a bank that's sort of behind card issuance or lenders or payments on behalf of startups. And so what we see, and then we of course sell directly to banks, so we know this problem deeply. We've decided, and I think that the success we've seen is because we focused on the kinds of banks that would work with us, and the kinds of banks that wanted a technology like ours today, rather than sort of dealing with the 2+ year sales cycle that you might see at some of the banks, at least in the United States. So that meant picking banks that were small, small and nimble as far as banks can be, banks that really believed that digital was a core strategy for them. So banks who are not just doing it as a side project or because they feel like they have to, but who really believe that their clients will, and their users and their businesses will want to interact online. And then it was about sort of being prepared to work with a bank and to sell to a bank. So that's again from the startups we work with, but also ourselves. And that was, helping them understand the risks they were taking by working with us, mitigate any of the ones which we had any control over, right? So buying the right types of insurance, trying to be as well capitalized as we possibly can be, which is a really tough one, and you have very little control over how much money you have in your own bank account. But there's sort of ways to make them feel better. Code escrow is a good example of something like that. And just sort of going through the list of risks ahead of time and understanding what should they be concerned about, even if some of them seem really stupid to you, as you're going to succeed, your startup is great, your technology is great. You have to sort of think about it from all of the possible things that can go wrong. And then cybersecurity, of course, is a huge one. So for us, very early on, we did our SOC 2. That made it about 10 times easier to have conversations with banks after we got that done. And it was painful and expensive for us at the time, but it really made all the difference in the world.
Thank you.
Thanks.